What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I went through some major changes, okay, to my M1 Finance dividend portfolio. I made a post on Instagram with the changes, a heads up with the changes that I made. And I believe that this is very significant because there are certain stocks that were way too powerful on my dividend portfolio, and there was no way I could keep up with them. They were just way sky high. Look, I put a lot of money into this dividend portfolio. It just was so powerful, so fast, and I could not keep up with certain stocks. So I sold certain stocks, and I'm going to be making some changes to my dividend portfolio. Going to be selling and then buying and then rebuying, but I need to focus on certain sectors. And as I show you in my channel, by the way, M1 Finance, they have if you join M1 Finance, you get a $30 to start with your dividend portfolio. I do too if you use my affiliate link, so feel free to do that. Click the link in the description below in my comment section and feel free to check it out. $30, that's almost an at&t stock. It pretty much is right now. So let's think about this, okay? When you cannot keep up with stocks, either you sell them. Now, if this is a Roth IRA or traditional IRA, all right, you're growing, your net value or your net worth is increasing. That's something to puff your chest about. But when you're a dividend investor and you have a dividend portfolio or a fractional share, that can be a problem. And, for me, it became a problem. And, I went really big into stocks. I made some mistakes. I bought way too many shares. Well, not way too many shares, but way too many stocks. And I just could not keep up. When they started growing, I had to change a percentage, buy more stocks, do this, do that. But now I'm more focused on the real estate sector. So, the best thing that I can tell you is, that famous quote and phrase I always go for: fight the way you train and train the way you fight. Can't even talk, I'm like choking on my coffee right here. But let me show you what I've done with my changes right now. Okay, so I'm up 74.70%. I have gained $2,874.29. Now, again, this is a dividend portfolio. The Death Star is getting bigger, okay? This is what I'm happy about. It is getting way bigger, okay? And I like that. Of course, that's nice. It's getting bigger. It's growing. I'm getting passive income, $359.70 on passive income from dividends. But what I really had an issue with was IIPR, okay? So what I'll show you what I'm doing right now. So I had IIPR, okay? I'll show you real quick. Let's jump over here. I had IIPR in this section, and I was at 11.1%, and it just kept on growing and growing and growing. I got it way when it was down when the pandemic started. Could not keep up. So I made a section, a real estate sector, a business development company section, and this is what I did, okay? Because I could not keep up. Now, I'll show you in the section what I did, but Omega Health Investors, I'm focusing more on real estate right now. OHI is doing really well, so they're getting some money in. I'm throwing in $200 as well. ExxonMobil, Enbridge, Iron Mountain, they're getting some nice payola. Brookfield Infrastructure Partners, LTC is getting some nice payola. Spirit Realty Capital, First Energy, WestRock, Unilever, Hormel Foods, British American Tobacco, and QYLD. So what I did with QYLD was I had it in my main portfolio section, but why not just throw it in a bigger section so I can just buy more shares, and then this will continually buy more shares for other stocks. So things are looking really strong. Now these stocks that I bought, Arcadia Realty Trust, Plymouth Industrial REIT, and Healthcare Trust of America, I'm still going to buy in the future. Okay. I have a screenshot in my phone saved. I have it on my computer, but look, only selling $64.64 of IIPR. Does that make any sense? Well, let's look at what I'm doing now. So since I'm attacking the real estate sector, I decided to put IIPR right at 40%, because how am I going to get this stock to grow? Okay. I'm attacking the real estate sector. I told you guys before in my previous videos, and you should check out my previous videos. I do a lot of stock and dividend analysis videos on stocks that I own. I'm going after the real estate sector, one, because it's been down from the pandemic and it's going to take time to grow. Next, I'll probably go after the financial sector. But these stocks, okay, Iron Mountain, high yield dividend stock, monthly rates, I had LTC in the main part. Now I have them right here. So now I can start buying LTC here. QYLD, I'll start buying. I might add Stag and Realty Income if I start racking up more money. And again, I have those guys on my E-Trade dividend portfolio, but let's think about this. These stocks increase their dividends over time. I have a goal to make $1,000 to $3,000 a month on my monthly dividends and $2,000 to $4,000 a month on my quarterly dividends. That's highly rational. There are people who rack up a ton of money doing that. And, I'm just putting money in, parking my money, and letting the dividends reinvest and grow, and just putting more money in. It's going to get to the point where I have a goal, okay? So far, this is down right now with a 2.25% dividend yield. My goal, okay, I want to have fun. Obviously, I'm having fun investing. I'm having fun doing these videos, showing you guys what I do. But again, I want to get to $100,000 for a dividend portfolio and then keep on going. The nice thing is, once I get to right around $100,000, I may not even need to put money in. Okay, well, I probably will, but think about it. I'm just reinvesting the dividends, reinvesting the dividends, reinvesting the dividends, and I'm getting bigger and I'm getting stronger. Some of you guys, I've watched videos, $1 million dividend portfolios, $300,000 dividend portfolios. I see how you're doing, and I'm learning from you guys as well. So it's going to get to the point where I start racking up more cash, I start racking up more shares, and then these things just do the job for me. Then I can have some fun, buy individual stocks in E-Trade, get more aggressive, and go from there. So this is the beauty. Maybe I can throw money in Fundrise. Maybe I can start another fractional share dividend portfolio just on ETFs or monthly dividend ETFs. So I have an arsenal of a lot of things that I can do, but the goal is, once I get to $100,000, that's when things are going to get exciting. So again, $359.70 I earned in dividends, and it's just being reinvested and going faster. So I have good stocks. I have a good diversity of, Seagate's a great stock. Coca-Cola is a great stock. Altria, these are all great stocks. Now I put a little bit of a halt on Altria right now. I know they increase their dividends over time, but Aflac needs a little bit of love, and some of these other stocks need a little bit of love that took a hit. So these are good stocks. These are stable stocks. I think what I'll do, Omega Healthcare Investors, I'll maybe put it to 4% and give Altria a little bit of a 5%. I'll make a decision on that in a little bit. But Exxon needs a little bit of love. Hormel Foods, WestRock, Unilever, they need a little bit of love. So IIPR is going to be back and on the attack, basically in this section, my real estate sector / business development company section. Okay, I have Main Street Capital, I have Stellus Capital Investment, I have Gain. Okay, so Main and Gain are my two favorite business development companies. I have Main and Gain on my E-Trade dividend portfolio. I'm just going to let those things park, reinvest those dividends over time, Hopefully they can get me to at least $100 in passive income. I think that's going to be my goal with those guys, or just keep on reinvesting and enjoying it, treating it as a retirement pension, because these business development companies are, they have to pay a certain percentage to investors so that they don't have to pay a tax penalty. So that's the beauty of those stocks. So once I reinvest and start putting more money in, things are going to be very exciting, which they already are. And I'm really excited to see this overall portfolio grow. And this is why I'm showing you guys everything. I don't believe in charging people money for showing you what I bought, or showing you the art form of fractional shares, because I'm still learning. And everybody can learn from each other. It's just for entertainment purposes. But again, I'm showing you everything I'm doing, okay? I'm showing you my changes I made, my mistakes I made. I showed you a video with the bricks rate. That was a tragedy. I mean, my gosh, if this pandemic didn't hit, I'd probably be making an extra $40 to $50 on passive income just from the bricks rate. But that's okay, because I'm well diversified. I focused on this dividend portfolio, and that's fine, because once I get my money back from the bricks rate, or to see how much I get, I can throw it in O, I can throw it in EPR properties, I can throw it in the stag. There's a lot of decisions that I can do, or tactical or financial decisions or strategic decisions, whatever you want to call it, and go from there. I could throw it in Fundrise. But, again, having a balanced dividend portfolio, balanced section. So I have the telecommunications, I have the pharmaceutical, I have some that I would consider Altria Sin stock, I have the real estate investment trust. So I have all these sectors, energy right here, okay? I have a focus on these sectors, and they're going to grow over time. So again, if I can get to $10,000, okay, once I get to $20,000 in certain sectors, that's when I'm going to say, okay, new sector, time to focus on a new one, and then I'm going to drop the percentage down for these. I'm going to keep these. This looks pretty good as of right now, and it can get bigger and bigger and bigger. So I'll just leave these alone. I'm not going to sell any of these. I want to get to at least 25 shares in all these, but at least I'm downsizing a little bit, okay? And then I'm going to get, I'm going to add these other stocks. These I'm going to add probably in a few months. I just want IIPR to get a little bit bigger and stronger. Might even just, with some of these stocks, I might just buy them individually, okay, and put them on my E-Trade dividend portfolio. So there's a lot of decisions I have to make, but right now I want IIPR to get bigger because they're giving me nice dividends. The marijuana sector, it's not the Mary Jane sector, it's volatile, but again, IIPR is a farm, okay? So you own pretty much farmland, and they have to, basically, people have to pay rent, and they just grow stuff. So it doesn't matter if Altria, they're focusing on the Mary Jane. It doesn't matter if let me think of this. MJ, the ETF, is not doing well. These guys are still going to be strong. And you know what? 2.25% dividend yield, a market cap of 4.4 billion. It's only going to get bigger, and it's only going to get stronger. So let me put money in these guys, eventually make some changes. Again, it's very volatile. People are freaking out up and down. There's uncertainty a little bit. So just let it fly. As I always say, be patient. Never panic sell. Never panic sell as a dividend investor. It's one of the worst things you can do. Best thing about a dividend investor is, so things are down. My net value might be a little bit down, but hey, I'm going to buy more at&t because it's down. So that's the nice thing about investing in dividends. You can go up and down, right and left. It doesn't matter. You're still going to be fine. So let me know what you think of this video. Again, if you are new to my channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Make some comments. You guys have been fantastic on this channel. We are nearing 4,000 subscribers on this channel. Again, I show you everything I buy, everything I sell, the mistakes I make, things that I admit that I make mistakes too, so that you don't make the same mistake. I just show you everything, okay? I mean, that's what it's about. Why charge people when I can spread my viewpoints, my philosophy to you guys? So that's what this channel is about. It's not about me making money. It's not about, you know, how many clicks I get, how many likes I get, how many subscribers. It's about the journey, showing you my journey of getting to earning passive income and being happy earning passive income, and showing a way to earn passive income. And I'm just, you know, as they always say, you're just a nurse. I've heard that line before. You know, I've had people that I've discussed things with, just friends. I don't show them anything about my investing channel. I like to keep things low key, but you know, I just tell people, oh, well, I got to do a YouTube video tonight. And they go, well, you're just a nurse. Well, sure, I'm just a nurse, but you know what? I'm making passive income sitting on my ass doing nothing. And well, you guys are going out to the bar, getting drunk and partying and smoking cigarettes. By the way, smoking cigarettes. Who am I taking advantage of smoking cigarettes when you're telling me I'm just a nurse? So let's think about that. $9.33 from you telling me I'm just a nurse and you're going out to the bars and smoking. So let's think about that. So I hope you guys have a great Thursday, and I'm going to try to post a stock and dividend analysis video. There are some really good stocks that I'm interested in right now. I might let me probably do one later tonight. I'm gonna try. Don't quote me on that, but for sure tomorrow I'm gonna have one. So just try to check that out around 9 o'clock.